Hello, everyone. Welcome into another episode of You Win Some, You Lose Some with your hosts, myself, Huddy, and Dom here. Just kidding. Good morning, NASDAQ live trading edition. Not always every morning we're going over the gappers. On Wednesdays, we start a little bit later. If you're with the drill, you already know. But we always get some newcomers every now and then. So some people are like, why are they starting late today? That's planned. All right, we're going to go over a watch list. We're going to do some live trading for the next 20 to 25 minutes. And then we will go on our lovely Wednesday day and then meet back at 7 p.m. Eastern for some Wine Wednesday later. So, with that being said, how are we doing, Dom and Huddy? How are we feeling this morning on this lovely Wednesday?
Feeling good.
Uh, Feeling great. Alive, well, happy, excited.
Okay,
Those are my adjectives.
nice. All right. Well, I'm pretty tired. Want a nap real bad. But that's my own fault for staying up late till, I don't know, 11 o'clock-ish my time. And so if you know, on the West Coast, it's, what is it? I got like 6 hours. It's 6.5. It's not enough for me. I'm an old man. I need at least 8. But anyways, let's jump right in. And in the chat, feel free to ask some questions. We'll get to them when we get to them. However, if we get to them by the market open, we usually let the dust settle about 5-10 minutes, and then we look at questions. So don't feel like we're ignoring you. We will get to your lovely related questions to trading, or if you want to ask personal questions, I guess you can. Some hobbies, some interests. But anyways, watch list. Top of the watch list for me is SMCI. I don't. Let's put it this way. I like it. I said this in the chat yesterday. I like it. I don't love it. I like it because, yes, it's gone from 26s to the 40s and then pulled back for a couple days, then had earnings, and now has gone from roughly 38 to now we're gapping up to, let's round up and call it 60. Percent-wise, not 100%. If you know how I like to look at 100% minimum. However, this is a large cap stock, so going from 38 to 60 is well over 50%. So let's call that, extended, especially if you want to account for the fact that if you just ignore these 2 red days, we're up from, 29 or 27, 28, which is 100%. So depending on what portion of the run you call it, it is extended enough. Gapping up huge every day. Now it's just a matter of, can it withstand this gap, or is it time to roll over and kind of pull back and have its backside move and or first red day? It's offered that kind of move on many occasions, whether it's a gap up or a gap down. When it ran here, every time it gapped down here, red day, gap down, red day. Here, and then with the second run, it gapped up, red day, another big gap up just a few days later, and also a red day. So, or at least a red candle, right? It doesn't necessarily have to close red, but if it's just going to pull back. So we'll see how 60 does as a round number headed into the open. Other than that, I still am long some Fannie Mae. If we go to the daily here, we're just looking, strong. We just have some percolation the last couple of days over this low sevens area. The next area that really only matters is now 780. The question is, are we strong enough? Because yesterday, we held our gains, but we didn't really proceed to make any new ones, right? It was you can call this very sideways all day long. Obviously a slight uptrend, but nothing to be, what's the word? Insanely excited about. So we'll see how strong it is today. If it gets super weak and starts trading below 7 again, then I'm going to have to, just call it quits. But if we can start uptrending to 6 or 750, 760, and maybe even break out 780, now we're talking, and now we have, a really solid trade on our hands. So we'll see how that looks. If I look at all my charts here, the only other things is I've got LYT for a gap and crap. We'll see this is a former kind of China scam, but very long ago. It hasn't done it since Vietnam back here. Why can't I zoom in? Is this one? There we go. Way back when, in what is this, 2022? I was going to say 2023, 2022. Hasn't really done it since. It has plenty of gap and crap since, so we will see how it does today. Again, I just mentioned that because it could still run, just because it hasn't done it in a while doesn't mean it can't do it again. And then SINT is another one that has had its tough history of really getting anything going besides this run here. But other than that, all gap and craps have typically been crushed, and this is just done reverse split, reverse split, reverse split. So anyways, that's my watch list. I'm sure I probably covered most bases for Huddy and Dom, so I apologize if I was hogging the stocks here. But any comments or additions there, Dom or Huddy?
How do you can go first?
No comments, no additions. I'm watching the exact same things that Kyle just mentioned. I probably ignore SMCI and Fannie Mae for the time being, and look to focus on the gappers and check back on them later in the day. I don't mind missing SMCI, like kind of Kyle said. I don't just want to repeat what he said, but like I want it higher. Um, if it pulls back from here, I see like 54, 53 is possible. And so again, just need really good risk reward to make that like a solid trade. Um, and I just want like kind of more of like a blow off candle, some exhaustion volume, something that just like really identifies a top for me that I could size in a base risk off of. And that's just not where it is right now for me. So I don't mind missing it, even if it is a good trade. That's not really my priority. My priority will be LYT and SINT, depending on how they open. We'll see.
Um, as far as SMCI goes, I'm just gonna put myself in timeout on it, not for any reason other than I want it to be better. I also don't love attacking gap ups when there's not crazy extension. So I just put in my watch list that I want one more day. So if today can close in the 60s, be another strong green day, then I'll be happy to start looking at it Thursday and Friday. Um, because I also kind of feel like, Huddy, if I miss it, I miss it. It's not the end of the world. But if it gets better, I won't have had to take a loss on it. So I'm just going to leave it today. And if it gets better, it gets better. And that's how I approach a lot of my shorts. I'm not a professional short seller, so I want it to get better. A lot of my biggest losses come from fighting stocks on the front side, and I'd rather miss uh, or just be there at the right time. So I'll just be extra patient with that one. Also, long Fannie Mae, probably just going to risk previous day's lows from here on out. Maybe we have a breakout similar to back January 10th. You kind of had a breakout day hold, look kind of funky, not crazy volume. Even the next day, which would be today, wasn't that great. But I continue to hold higher lows and trend. So if it holds trend, I'll keep my starter on with the idea of 780 being kind of the big breakout, or I'll get stopped out and it's going to take more time. I got three first Green Day reversal watches, TIVC, AIFF, and MBRX. Just watching those and they're all opening kind of in a prime spot down like 3 to 9%. So I'd prefer them be red on the day than green most of the time, just because you have the extra layer of going green on the day. So watching 5 minute high breaks there. TIVC, two solid red days so far, back down into that 50 cent area, kind of bouncing off that resistance at 45 cents right now. Um, so we'll see if those can bounce. AIFF gapped up yesterday, but didn't really run or do anything. Had a little bit of movement pre-market and then faded off all day, right into the support from the first day of its run in the $8 area. So if that holds, I think this can bounce 10 to 12. And then MBRX, kind of a more funky one because it gave up a lot of its gains on that weird halt day, but then the second green day was kind of mid-range day that went sideways, and yesterday tried to go lower and kind of bounce back into the close. So that could just be a stronger stock. Probably not going to play it for a breakout or anything, but more mid-range there. So definitely want to see some sort of 5 minute high break or ABCD and green move into the twos. And then I just have like third eye watches on OMGA, cheap stock that's just kind of not gone back down to where it came from, keeps holding 20 cents. Need volume there though. Volume's quite pitiful here. And DOMH, just keep an eye on as well. A lot of wicks to the downside here after the big, strong green day that actually broke out through the 11s a couple days ago. Um, haven't touched this one yet, but if there is another strong day into the 11s and 12s holding up, maybe find intraday support to risk off of and look for a breakout over the mid 13s. So that's all.
Beautiful. A lot on your watch this morning, Dom. Got a lot going on here.
Yeah, when we have like the backside of all runners, like last week we had decent amount of runners, and
Yep.
then
The
Kyle and
TVICs.
Huddy tend to leave them alone, but then they kind of come into my secondary list.
Yep. They enter your house, your wheelhouse. So,
Yeah.
all right, we got 2 minutes here. Also, pinned comment is our upcoming boot camp coming in really a month from now, because February is a smaller month. or shorter month, I should say. And then come next thing, before you know it, March 22nd through 24th is going to be here in Los Angeles. So you West Coasters are very close, but obviously we always have people come travel from pretty much everywhere, Europe, rest of America, sometimes Canada as well, and South America. So feel free to grab your tickets, and we'd love to see you there. But we got a minute and a half here. I'll answer this one question before we get started here. It says Kyle, how about ALLO?
Hello.
Okay, this one doesn't look too bad. SRM. Okay, no. And then STAI. Also, for first red days. So ALLO is the best one of them three. I would say the ALLO is the only really one. SRM is not a first red day for me. Yes, it could have its first technical red day today, but this is not the really extended 2-day run that I like to see. Yes, technically from 35 to $1, sure. Yeah, it's extended percent-wise, but when you look at the actual like the daily of it, it's like this is not these just it just gapped up the second day and then traded and shopped around, right? I want SMCI, right? I want something that's just really extending itself upward, not something that's just going to gap up and shop sideways. ALO, however, has done that, right? We've actually extended ourselves and gone up. Is slightly gapping down, and it is extended enough. It's up 100% from 150 to 3. Let me look at the volume real quick. I kind of wish it didn't pull back so hard. I kind of wish this downside was the downside today. Doesn't mean it still can't go lower. This could easily see 250 or lower today. The only issue is that, with 10 seconds before the open, I've kind of got all my charts preoccupied. It's very likely I missed this here. We're gonna focus on SMCI as the market opens. So if I miss it, no big deal. If that gives you a gist of how ideal I think it is, it's not that ideal. So, and we're open. So part of me really wants to take a starter on SMCI with a very wide risk just to be in and remove some FOMO. But I'm going to try my best to wait and give it a couple minutes.
OSRH is pretty expensive.
Down a little more. No, Cleo, my lead analyst here, is thinking she can just smack the computer screen and it's going to work. She needs an iPad is what she needs.
Buy your cat an iPad.
Yeah, right. I'm sure there's
so you can go to restaurants.
Yeah, take them to restaurants. I'm sure there's like a mouse app where it's like running on the screen and they just attack it. And we're weak here. I'm gonna take some short, very small, just because I know it could still bounce. Only 1,000 shares. I'd love to get up to a few thousand, but we'll do 1,000. Wide risk. I could easily risk up to 62, 63. Let's just see if this ever spikes. But again, if it does bounce, let's say it pulls now at 59 to like 57. Let's say it bounces to 58s for a few minutes and then rolls over again. Then we have a new risk level that I could really add to. But for now, we're just going to put 1,000 shares on. All right. You've lost your privileges. You're making too much ruckus. Get out of here. Fannie Mae, almost 740s.
Yeah, I added a little bit right out of the gate just in case it's similar to that first day or that breakout from the last breakout. Just add in risking red green on that, and then we'll keep starter on if we don't hold up today. I'm just kind of at a loss. I don't really know how this breakout's going to play out, so I just want to kind of be open to all scenarios.
I hear you. It's a good little spike getting started. All right, back to SMCI here. All right, let's see how high this can bounce, if at all. High day is 59.08, so just right here is the last candle. And I imagine it breaks it. There's probably no way it doesn't, which is why I only have a starter. Here we go.
Are you risking high day?
No, I was saying I could easily risk up to 62, 63. Just 1,000 shares, and that's kind of the idea. I just want to risk really wide to see if, one, I have something on, so it removes my FOMO, but then two, I'm able to actually sit in it for the next 10, 15 minutes and see that if an actual trend gets set. And then from there, I can decide, okay, it's clearly uptrending, let's just cut it, or it's actually going to roll over and I can just add. Right now, no trend has been set, just chopping around. And technically, I guess I should get some orders ready in case Fannie Mae does break 780. That would be a scenario where I should be adding, but again, we're 40 cents away. All right, some more stuff action for now.
How many tries will you give SMCI today before you just accept that it could just be another green day?
Probably 2. It's a good start to the stuff there, but again, very choppy. So we're gonna keep waiting. But yeah, probably 2. I don't want to give it too much more time than that. And if it does have, let's say it does pull back and actually does pull, I would look at like for 55, maybe 54 best case. Certainly approaching 56, like towards red green area. But again, that's we gotta see it go below 58 again first. I guess also a ticker I put on my watch list, however, I don't really have any intentions of trading it or watching it today, but I just have a chart up of it. ADTX, a little low price runner that actually gapped up and is running higher today. So that's kind of cool to see. Higher the better for some momentum. Usually if you can always get a low price runner going high enough, you get a little sector going. So that'd be cool if this runs like massively to get, call another 5 to 10 small cap runners or small price runners. That'd be fun. But we'll see for now, only on day 2.
And nice to see that M goal momentum kind of continuing into the next week.
Yeah, as well. Yeah, and speaking of M goal, we're back down to the
Dumpster
30s.
fire there.
Pretty good. All right. All right, we're pushing 60.
Strong.
And now it's where it's like setting this. It's going to set these boundaries here. Probably going to worst case cut it at 62. So if we just ramp right to that, clearly that's enough to where I'm like, okay, I'd lose, a little under $4,000. So a very small starter loss. The higher the better. I do agree with Huddy and Dom's thoughts in the morning, which is if it can do one more day, now it's just that much better for, call it Thursday.
New highs, Fannie Bisler.
744. It's coming out with some vengeance today. Quite the strength. This daily is just getting.
I haven't really heard any fundamental news or anything about it, or any chatter really.
I don't quote me on it, but I saw a headline, and again, with headlines, I have no idea if it's just some random blog or it's an actual article of legitness. But something like the Trump administration is planning on firing or downsizing most of the FHA or FHA's staff. The FHA kind of oversees Fannie Mae, so I don't know if that's perceived that as bullish or bearish or it even happened. But if it did, there's just underlying. I think there's a lot of, if anything I've learned the last couple of weeks, there's a lot of like slower or quiet news, maybe in the background that like people who follow would immediately think is Fannie Mae's bullish. But for you and me who like just don't really dive too deep into the thesis of it all, we just know it exists. We wouldn't really even notice it, but could be the reason why this is why this gapped up here, and that's why it's still uptrending there. So we may never know, but so SMCI here, although it has a strong morning spike, the harder this fails back would be a pretty tell sign. I would think if this fails right back below 59, starts trading 58, I would start to look for ads. and then move and actually put my risk on this, call it 60-40 high if it holds. But if it keeps going, then we know that an actual uptrend's being set. But if we fail hard here, I would argue that's just people either long selling and then chasing, or shorts chasing like me, but actually having a bigger position than I do, so they have to cut it and then they squeeze themselves. But once it's over, then it kind of the actual trend gets set. So there's still a chance for this to fail, but if not, happily we'll cut it. Also, I haven't shorted this, but LYT quite the stuff. Probably should be short, but I'm gonna give it a second just in case it's a fake out. Otherwise, happily can get short shortly here. But back to SMCI for now. Possible failure. I'm kind of. It's too early to tell. I part of me wants to be like, oh, I could just short right now and get a really tight risk reward. But anything over VWAP for me is like this could easily, and as I speak, just hold it, and now we're right back to where we were. So I'm gonna really try my best to not, Still struggling though. All right, LYT here. We either bounce it, but if we break the low a day again, then I'm gonna trust it. But I just want to make sure with this one, with the whole China thing.
I think that's one of my biggest gains ever.
Say it again.
I think LYT is one of my biggest gains ever from that.
Oh yeah, mine too. Yeah, from that day back in 2022. That's when I was naive and didn't know what I was trading, or I knew what I was trading, but not the. I guess most people didn't know what they were capable of.
I think that was the week of my wedding. Like I was out in Maine, and it was just like a gift.
Nice, that's fun.
Back when they were easy.
Yeah, exactly. But yeah, given that history, I just want to give it a little extra cushion of security. Not like this low day is any more meaningful than the first per se, but just want to really make sure they're not going to try to fake this out and then just bring it right back. And they still could. They could do it again. They could break it to 38. I get short, and then it goes again. But all right, SMCI. This is still just chopping. Which again, if this fails even more so, it just prefer the proof that or further confirmation of that other thesis I had, which is it's trying, and if it can't, then this spike was just, call it its last gasp, so to speak. So we'll see here, but I'm very close to considering an add. Yep, let's add some. If we can keep going weaker and stay below VWAP, we'll add some more. Yeah, we're gonna add some more. We got 3K now. Risk is not full yet. We could still. Oh, now I want to wait for it to bounce, and if it could stay weak on the bounce, then add even more. Or it's gonna go straight down to low day, which I wouldn't love, but we're gonna add some more here because I'm doing the math in my head. 58.80 average, 4K, 8K with some slippage. So yeah, we still have room, but I'm gonna wait for possibly low day 58s because I know that sounds crazy, but if we break 58, we're still 56, 55 could be on deck. So not the best risk reward, but again, I'm looking to be more on the right side of things than just have this incredible risk reward. So. Also, I just got short SNT or SINT on this low day move here. Let me show you the chart here. It's popped out. Just got short there. So hopefully that fades lower. That would be nice. But SMCI here, great pull. I'd really like it to bounce. Like I said, if it goes straight to sub 58 on this on a panic, I don't know if I can add. I'd really like it to maybe double bottom, bounce into 59 one more time, and then roll over. That would be really cool because now I can really add into this bounce. Just get a better risk reward, right? Like I was saying earlier. But Fannie Mae at 750, sweet. It's trying, but I don't know if it can. Come on, I'm gonna put some orders in here just in case it can pop or not. That makes me want to just short more. Can't even bounce. Well, I took 1,000 shares here on this candle. I've got 5,000 now. Roughly about full risk with some slippage, but part of me does want to risk more, but only if it bounces and I get a good risk reward. Otherwise, I don't think risking $2+ a share makes the risk reward worth it. YT, we're just flirting with it here. I haven't forgotten. All right, we got a green candle going for SMCI. Let's see if we can get a little more there. Do you need the video blocked? Okay, ready? 3, 2, 1, go.
I was not going to make that an easy fill.
Uh-oh. You're right. It's not is it SSR? No, that's why. We're sorry, we're talking about LYT here. We still got SMCI up. SSR is on, so I also tried to short there. It did not fill, so we might need a bounce, which sucks. Had I known that, I actually would have maybe tried to risk it and get short in here, just given that it was right at low day. Knowing I could, it's easier to fill that versus in a panic, but again, it could still pop right back. Also, SMCI. New low day. That's looking good. And again, just to go off history, like if it ever gaps up and fails, we either have this day where it goes actually fairly red, right? This close was 42, and the low here was 38.82, so about $3 a share or so, which would be cool. So that's almost 10%. Or a day like this where it does go just barely to red green, but it doesn't fully go there. So I'm thinking at least, in red green's 55.80. So I'm thinking at least call it 56. Maybe we go 55. 55.
55.
Yeah. Or really get ugly and go like 54. I mean, honestly, 53, who knows? But I'm not going to be predictive. We're going to just react and see how low we go. But we got my 5K shares, again, preferably if I had a better risk reward. But a better average, let's say if I had a 59 plus average, we'd be more, maybe like 7 or 8K shares, but it's all good. Excuse me. Actually, really quick, let's just take a look at like December 3rd real quick. Let's take a peek. Intraday 12-3-2024. 12-3-4. Just take a look what this looked like. So yeah, had some kind of strength, right? Some choppiness, probably got some shorts trapped, kind of like it did this morning. had a push, a little bit longer of a push though. Obviously, lasted well over 30 plus minutes, 40 plus minutes in the day, and then midday came around, or late morning, I should say, and we actually got that panic going, and then, oh gosh, Jesus, no Cleo, and then bounced and then faded, and that was the day. So anything similar to today, we obviously didn't have as long of a push in the morning, but maybe we have just as quick or as fierce of a panic. So we'll see how ugly this gets, how quickly it gets. Head lower. Alrighty, filled some LYT here on this bounce. Coming back, so pretty much getting that low a day move. I'll show you the chart here. There we go. Just had to get some strength with SSR, so we got that, which is good. In fact, the more I look at SMCI, I do think this actually goes red. I do think we see actually 55, but I will still cover some into red green at 56 just in case. All right, let me take a look at the chat. The dude asked, what's my risk level on something like SINT on the risking low a day break? So I risk pretty wide. Risk reward for me is never really that big. It's like 1-to-1 at best. And so for SINT, I would risk something well into like at least 6, right? So I only have a mid 4s average. Yeah, at least pre-market highs, if not higher. So very wide. But again, if it fades, I'm going to get something like 1-to-1. So nothing spectacular. And then William says, if I look at the 2.4/216 in 2024 and SMCI, same action. Yeah, I mean, that day was much, much better. I would call that day 8 plus. On this day, I made around just under 80 grand on this day. And so this is good up there. But I don't know if it's as good, which is why I haven't risked nearly as much. But some might argue yes, but that's just not my style. I need a little more out of this to feel that much more convicted on it. But here we are. Should have had some orders ready, but I could still dip and fill me some. All right, covered 1,000 there. Let's see. I got red. That's looking good. But again, it's very similar to that last chart we saw on December 1st. I also don't want to get caught on any big bounce either. So part of me is, wants to be there for a panic lower, but then also wants to make sure this isn't going to just immediately bounce to 58. And then I'm sitting here thinking, what did I not cover more for? So, but I do think this can go lower. So I want to give it a chance. But also, again, even if it does bounce, that could be an adding opportunity for that net to fade back down to 56 anyway. So I'm not in a massive rush. Looking like it might bounce. Which again, if that is the case, if it does end up bouncing, like let's say the previous low day at this mid 57s, I actually would consider adding. We got a question here, Dom or Drummer Max. Dom, are you in MBRX?
Yeah, I just longed that a minute ago, and I also just longed TIVC on the red-green move.
Ooh, look at this little spike. Very nice. All right. Things are moving. Why can't I? God dang it. There we go. All right. Fannie Mae's holding. All right, more bouncing for SMCI. Anyways, guys, feel free to answer, or not answer, feel free to ask some more questions. We'll stick around here another 5-10 minutes, and then we'll head back into the room. So probably don't see my covers on here, but I will alert those in the Clover chat when they come. BZ says, does time come into consideration at all? Like if we are getting into 10-30, things can get choppier. Yeah, absolutely. Whether you're long or short, I think midday ends up being quite of a consolidation period for most stocks. And so yeah, after at some point the trend either slows down or, I mean, sometimes it can continue. It's not black and white, but yeah, like SMCI, I don't think SMCI is going to, and let's put it this way, the first 30 minutes here has been probably the most range it'll have of the day. I do think it's possible goes lower, but, if it just went from 60 to 55, let's call it a 56, I don't think this is going to go from 56 to 52 in the next 30 minutes. Yeah, maybe it could, but it wouldn't shock me if it doesn't, right? But I am sitting some on 57.8, or not 57, 57.5 for just adding this starter, or this, sorry, not starter, this cover back, if we can get there.
HIMS, HIM's a little breakout there and some parabolic action this morning. Not really parabolic, but
Certainly
for a higher cap like that.
$10 share spike. Nice. It's a big move.
I did just get short LYT at 40 just before we end the
Nice.
stream. I'll be risking very wide to about 60, and hopefully it doesn't go there.
Hope it doesn't happen. SMCI. And again, willing to add a little bit more SMCI. I think he bounced a little bit more, but doesn't necessarily have to. Anyways, let's read some questions here before we head on out. Kyle, I had a 59 average for SMCI. What would you risk off? What would your risk have been if it did run up? Matt, I don't know if you missed the beginning of the stream, but I was saying like 62, 63 worst case. So when it was pushing here, I only had 1,000 share starter, so I had I could honestly have risked till 70 if I wanted to, but like it just wouldn't make much sense. But then once it failed, then I put my risk to high day. So when shorting with right risk, do you tighten your risk level after the ads? SK asks. Technically, if you want to be numerically correct, yes, right? You can keep your risk wide on ads, but then just be prepared to lose more. So it's you can do whatever you want. You have to be prepared or acknowledge what the consequences are if you do so. So I'm also watching SMCI. I feel like I want to add some more at 58 if it can get back there. But how did you approach scaling up your R level when you first became profitable? That's a good question. If you have an answer, Huddy or Dom?
Like what, making more per winner?
Scaling like your R is being your average one loser. So like, if your R is losing $1,000, how'd you get up? Or when you first started getting profit, how'd you go up to start losing 1,500, or from 100 to 200, or from 200 to 400? What was that process like for you guys?
Dom, you want to take it or should I?
You can, because I asked the question, then I totally did not listen to the answer.
Okay. Yeah. I think there's a number of ways that people can do it. The way that I'm currently doing it, which is not the only way and it's not the end all be all, is I risk a percentage of my account. And so when my account goes up, I risk more. When the account goes down, I risk less. And that keeps me in like a compounding place. And I think it's a good way to do it if you have like a systematic strategy that's robust. The other way is, let's say, I'm risking $100. Well, I think the wrong way would be like, okay, I made a good trade on $100 risk. Like, let's risk 200 tomorrow. I think, generally people want to get rich really fast in the market, and that's what's going to probably backfire and emotionally damage you. I think the best way that I've seen people scale up with discretionary patterns is slowly but surely. So maybe, risk one day is 100 and the next day that person might add 10 or 20% to that risk. So instead of $100, they're risking 120 and just getting used to the slow increments and just taking your time with it. Because if you go too fast, like you're going to ruin all your confidence and that's not what you want. So if you're going to do it methodically, I would do it slow. And if you're going to do it systematically, I do it as a percentage of my account and just make sure, it's a lower number so I don't blow up my account.
Yeah, no 10% risk of the account. You got 10 losers, you're done.
It's close to 10, but I don't recommend it. It's scary.
Dom, anything to add?
Just about sizing up.
Yeah, pretty much.
I'm in like fourth.
That's right. No, I'll add to that to say, like, I would imagine Dom's answer and my answer are pretty much the same. That's the two most fundamental ways, and again, I don't mean fundamental analysis. I mean fundamental of like just the true foundation when it comes to sizing up. That's really the two probably best processes about to how to go about it, right? Either you have $1 risk you're okay losing, and you slowly scale it up. And I don't mean slowly as in doubling it tomorrow. I mean if you're risking 100 today, you risk 110 tomorrow, right? Or 120 tomorrow, and you do that for a little bit, then you risk 150, next month, kind of thing. Or it's a percentage, and you just stick to what your account value is. So either or, I think, is successful or can be successful.
Grittani has a whole YouTube video because he if you look up Tim Grittani on YouTube, he has a whole series of like 8 months where he was taking like these six-figure losses too often. So he had to learn how to size back down and then like build his size back up and make sure he's not making mistakes. And he had to like earn his size into the next month by holding himself accountable. All those videos are free on YouTube. You can watch them. You should watch them.
I think you just got to be a turtle with whatever process you use. You can never really go too slow, but you can definitely go too fast, and you don't want your oopsie. We talked a lot about biggest losses and oopsies yesterday in the webinar with me and Huddy, and it's best to learn the tough lessons at smaller size, or at least manageable size, because when you find yourself fighting stock or having a bad day or taking multiple losses on something, like the faster you increase risk, the more those are going to hurt and harder to come back from, because then you're kind of stuck at those stakes, even if you're uncomfortable, because you need to be risking that much to get it back. So I think really slow and steady. I did like $200 risk for years, and then I incrementally did it by like $100 until I got into the thousands. But you can never go too slow. If you want to do this for a really long time, it's better to get the habits down and to find yourself trading in the zone. And you can find yourself once you start trading really well, not needing to risk as much to make the kind of profits that you want to make. So it's not all about how much can you throw down all the time.
There you go. And Justin says just on this comment, he's like, I have a $30,000 account, and when I've started 5 years ago, I was just risking $1 trade. That's fine too, and that's the other caveat, which is like if you're just starting, like you don't need to risk any huge amount of your account, even average, right? So like this is the answers we're giving is on the assumption that you're profitable, right? You're scaling up. You've had consistency with the risk they're risking now, and you're looking to increase that risk, right? If you're losing and you increase risk, all you're going to do is just lose more, right? So I would double down on that, Justin, and agree with you. Like if you have a big account and you're just starting, yeah, risk as little as you possibly can, because it just doesn't make sense to mindlessly lose that money just because in the name of you have more money. Like you could get the same tuition from the market losing $1,000 over 6 months or $10,000 over 6 months. It's just whether you want to take those lessons to heart or not. So yeah, that's a great point. But anyways, we'll do one more question here before it closes out. Went a little longer over today. If we didn't get to your question, feel free to join us on a Wine Wednesday tonight at 7 p.m. Eastern. Much more time where we're not actively trading to just sit back and relax and answer as many questions as you guys bring to us. So. Question for Dom. Most people call for gap ups before buying the first green day pattern. Is that normal, or for you to buy red to green moves on that setup?
Yeah, it's preferred. I think a lot of people really value red to green, like people value VWAP or yesterday's highs and previous close is important. I'd much rather have a stock near support going green, like you can see it on MBRX right now. It's starting to speed up and the volume's coming in as it's going green. And the same thing on first red days. I think there's a lot of people put a lot of um, importance on that level. So if the 5 minute high break or an ABCD happens before that level, I have an early entry and you can kind of treat it like a breakout of sorts where I'm already involved before that surge of volume is probably going to come in at those levels. So whether I prefer weak open red to green move, but the same type of thing can be, a small gap up, hold the green level, stay green, prove that it's strong and bullish right now, and then continue higher. But yeah, it's really just in that 5 to 10% either way is kind of the sweet spot for me buying reversals is just don't be up too much or down too much.
There you go. Beautiful. All right, everybody. Great questions today. Some great trading. Again, if you're in the room, we'll keep monitoring SMCI here and all the other tickers we mentioned this morning. And again, apologize if we didn't answer your question today, but feel free to join us on Wine Wednesday, where, of course, we'll talk more about just trading and questions and the boot camp, etc. All good things. So have a great rest of your Wednesday morning, and we will catch you guys all later. Peace out, everybody.
Hey.